Shahar, Ramadan Kareem to all the attendees. Thank you so much for joining us at the TikTok series of the BIBF. My name is Ahmed Naimi. I'm going to be the moderator for the session today. I'll just, prior to us starting with our session, I'm like we always do, just going to run you briefly, just for 2-3 minutes about the BIBF, just prior to starting. The BIBF, we've been in the market for around 40 years so far, and we're actually celebrating our 40 years anniversary this year itself. We are affiliated and governed by the Central Bank of Bahrain. We are under the Central Bank of Bahrain in terms of any decisions or anything that comes out. We have been training, we've trained around 360,000 students so far from Bahrain and outside Bahrain, and we actually train in around 64 countries worldwide. We have over 600 specialized programs, and we have sort of a global trust from across the board, from affiliations and partners from across the world. World Bank, be it Amazon Web Services, Islamic Development Bank, PMI, CFA, all across the board in terms of affiliations. Now, just briefly, these are the countries that we actually deliver training at. A lot of people think that we are a national or a local institute, but we are actually more of that. We are a global institute. This is basically the board. The board consists of very seasoned C-level executives, CEO level, chaired by the chairman of the governor of the Central Bank of Bahrain, His Excellency Mr. Rashid Al-Maraj. This is basically a view in terms of the IBF's future, and by the summer of this year, inshallah, the dream has come to reality. We are going to actually move to our new building in the Bahrain Bay, in a very prominent location, seafront, a state-of-the-art building in terms of technology and whatnot, and facilities. So inshallah, by September this year, the classes and programs are going to be run from our new building. This is basically a bit an old picture, but currently the building is completed. We are doing the final finishing touches to it. The BIBF consists of around 6 centers, being banking and finance, Islamic finance, digital transformation, project management, insurance, leadership and management, and the academic studies. What we do is basically we offer a wide range of services from executive education, master classes, customized training when it comes to multiple delivery programs from leadership, insurance, digital, Islamic, all these elements. We can do a customized sort of offerings. Professional qualification, we are one of the biggest institutes in the region that has the biggest affiliations in terms of international affiliations with professional bodies. Simulation training, we have a state-of-the-art dealing room where we do a lot of simulation programs through that dealing room, whether it's Islamic finance simulation or cybersecurity simulation or dealing room simulation. Just a bit about the Digital Transformation Center. We offer a wide range of programs, and they cater for different learners level, from graduates, specialists, mid-management, and executives. We do a lot of board and executive management programs in the technology front. And we have a number of academies from digital transformation all the way to IT. So it depends on the area that you're looking at. We cater for all ranges of technologies, basically. Without further ado, this is basically also the pick of all the partners that we currently have affiliated with us. Without further ado, I'm going to start with the session today. The session today is all you need to know about crypto assets and decentralized finance. And we're going to talk about what are crypto assets and how do they actually work, the opportunities and challenges of crypto assets, the regulations in Bahrain behind crypto assets, and some examples of the crypto assets. It's going to be delivered by a good friend of mine and who is the head of IT in the Bahrain Institute of Political Development. He has over 17 years of experience in IT, covering Saudi Arabia and South Africa. He has successfully worked on a number of projects, whether blockchain or cloud services, and has a wide experience in various sectors, telecom, banking, and government sector. Please welcome me on the on board, Mr. Fawaz Shikrallah. Fawaz, the floor is yours. Guys, any questions that you have just prior to actually handing over, any questions that you have throughout the session, please post it in the Q&A section or the chat section, and I will be asking those questions after we finish with the session. Thank you so much. Fawaz, go ahead.
Thank you, Ahmed, for this introduction, and thank you for the opportunity to BIBF for making this possible. I'm very excited to be able to share this session and the information, this knowledge with you guys, and to benefit you with crypto assets, what's happening in the space. It's very, very exciting because a lot of things are changing in terms of finance, and there's a lot of opportunity for you to be able to launch new products and services for your existing company, or to help you launch brand new products and services if you want to run your own startup. So without further ado, let's go ahead and get started. I'm just going to share my screen. Can anyone hear me clearly? Ahmed, you can hear me clearly? Is my voice clear? Yeah, okay, perfect.
I do, go ahead.
Okay, so we'll be talking about crypto assets and what are as Mr. Ahmed mentioned, the regulation and what's happening in the space. But before we get to the agenda, I just want to share with you one use case here that was submitted. So this was submitted by Dubai Metro in 2019, and the idea was to be able to issue token share ownership for a brand new metro station connecting Sharjah and Dubai, right? So the aim of this was specifically to reduce the infrastructure cost of building a brand new metro station connecting Sharjah and Dubai because of the traffic congestion between the two emirates. So the use case was building a new metro station in Sharjah and being able, let's say the cost was about $10 million. So the government was saying, okay, how can we reduce the cost? So they will fund $5 million to fund for the building construction. And then the remaining $5 million would be issued as token share ownership for the public as a metro coin, for example. So one metro coin would be equal to $1,000 worth of Ether in this case, which means that you would be able to purchase one metro coin and you would own a equity stake, a profit sharing in the metro station once it goes live. And by the end of the year, once it's operational, the profits you would earn based on your token share ownership. So if you own one token, you get 1% of the profits generated from the metro station. Now, we all know that metro stations always have very high revenues because of the ticket sales, advertising values, and branding values of that station. So this is a powerful way for the government to reduce cost of infrastructure into building a brand new project infrastructure and benefiting the public where you can actually purchase token share for that metro station, right? So we'll talk about more what this means and how this is possible with tokenization and with crypto assets, right? So before that, in 2019, there were a lot of challenges, specific legal challenges. There was no regulation from the UAE about tokenization or about crypto assets. The good news is in 2020, they issued regulation on that. So now this opens the doorway for startups, for companies, for governments to be able to leverage token share ownerships and crypto assets into their projects. And the same thing with Bahrain. Bahrain and the central bank, they announced the crypto asset regulation in October 2020, again, with the same concept to be able to leverage and allow companies and the government and startups to leverage token share ownership, crypto assets specifically, into their products and services. And we're going to see how that works and how this can be a huge value advantage for companies and for startups who want to get into the crypto asset space. So the agenda for the day is I'll be talking about crypto assets, what they are, the opportunities and challenges, and then we'll jump to regulation. And then we're going to switch into decentralized finance and what is the relationship between decentralized finance and crypto assets. And finally, some examples today of crypto assets and how they're being used for real estate and for the government sector as well. Okay, so in order to understand the crypto asset, we have to go back to when Bitcoin was first created, because that was the main advantage of how this whole thing started. Bitcoin started in 2008 and 2009, the first transaction was happening, where it opened up the world where you can send one Bitcoin to another person all across the world, skipping the banks and skipping the fees that banks charge on a transaction basis, right? So if you fast forward a little bit to 2011 and 12, a guy by the name of Vitalik Buterin, who was a computer science student at the time, he was studying in university in Canada, and he was actually very interested of how Bitcoin functions. And he was interested in the technology that makes Bitcoin possible, which is called blockchain. And he was saying, how can I leverage the same technology that's making Bitcoin into for corporate sectors. Now, of course, at that time, the world economy was sinking so fast, the global crisis with financial crisis and everything. And so when Bitcoin was created, it was as a response to the financial crisis that was happening, because we all know a lot of the top leading Wall Street bankers, they weren't even prosecuted in court. So that's the reason why Bitcoin was created. So when you fast forward, when Vitalik was thinking, okay, Bitcoin works 100%, you don't need to have a bank to send money across. How can I leverage the same technology and use it for the corporate sector and for enterprises? So he came up with a white paper called Ethereum, and he launched and he joined forces with other technology professionals. One of them his name is Joseph Lubin, and he runs currently Consensus, and 3 other founders, and they all created Ethereum, which is a network, a blockchain network, which allows you to leverage blockchain to be able to issue what's called ICOs, initial coin offerings, and token share ownership. What that means is they're leveraging crypto assets and allowing any person to be able to create a new project on the crypto assets of Ethereum and launch it on a global scale. And any person in the world can be able to subscribe or purchase into that asset using token share ownership, right? So a token share ownership is an allocation of assets, real estate or stocks or bonds within a specific crypto asset, which can be a token of exchange. In the case of Dubai's Metro, it's called Metro Coin, for example, right? So in order to understand the relationship between token share assets and crypto assets, we have to go back and to understand what are tokens essentially. So let's talk a little bit about what token is. A token is any medium of exchange. So if you go to Dubai Metro, you have to use the Knoll card, right? So you have to go and put money into it, like 100 dirhams, and you get the Knoll card. The Knoll card is a token because it has value, right? You use it to be able to travel from station to station in the Dubai Metro, right? But you have to be in Dubai to be able to use the Dubai Metro. So in this case, the token of exchange is Knoll, the Knoll card. If you guys remember, before the pandemic, we used to go to City Center and take the kids to Magic Planet. You have to buy the card. You have to put money into it, and to be able to use the games within the Magic Planet for the kids. So that Magic Planet, the card, is actually a token of exchange because it has value. It has money value because you put money into it, and it gives you value because you can use the games for your kids for their entertainment purposes within the actual amusement, within the park, within the Magic Planet. So a token is a medium of exchange. Bitcoin, BTC, is the token for the Bitcoin currency. Ether is the token of exchange for the Ethereum cryptocurrency. LTC, Litecoin. So for those of you who are trading and buying and selling Bitcoin, BTC is the token of exchange when it comes to Bitcoin network. So now we're saying, okay, how can tokenization help us provide new products and services to launch for companies and for organizations? Now, here's a very popular example now in real estate. The process of tokenizing crypto assets. Step 1, we take an existing physical asset, a real estate hotel, for example. In this case, let's say a new Four Seasons hotel is going to be built in Spain or Maldives or whatever, right? You took that whole hotel, you issue token shares against the hotel. You call, for example, H tokens or hotel tokens. That token sale, you say, okay, I'm going to let's say the cost of building is $1 million. I'm going to issue 500,000 worth of H token shares for the public to buy into it. Each token will represent a 10%, let's say a 1% of the profit generated when the hotel is ready. So people like you and I, anybody can go and purchase a token share and be able to own 1% of the profit of the hotel once it's ready, and generate it every year and assign directly into your wallet account every year. And this goal, what happens, you build the whole application on the Ethereum network. Ethereum network supports what is called ERC20, which is the standard for tokenization share of ownership on the Ethereum blockchain. So it's very simple. You build the hotel, you issue the token shares, the token share get assigned to you as an owner, as a certificate. And then once the hotel is ready and operational, and minus the cost, let's say marketing or operational costs, the profits get assigned based on your token share ownership. So if you have 10 tokens, you'll get assigned profits based on your token share ownership. And so now this opens the door to many huge possibilities, specifically for the real estate sector. Because when you start thinking of what are the possibilities? You can apply the same concept to hospitals, to medical centers, to university buildings, to shopping malls, residential complexes, or even commercial real estate. So you can see the advantage of how this has on the real estate sector when you start leveraging token share ownership. At the same time, this happened now for a hotel in Paris. Also, they deployed a token share ownership for building a brand new hotel in Paris, and they assigned 1% profit sharing for that hotel as well. Okay, so now let's talk a little bit. If you guys have any question, please, as Ahmed mentioned, just put it in the chat and I'll see if I can answer them as we go along, because I'm sure you might have some questions as we go from each slide to slide. All right, so let's get into crypto asset regulation. So the great news is, as I said earlier, the Central Bank of Bahrain issued what is called the Crypto Asset Regulation, which is a monumental step in the right direction. By leveraging crypto assets, allows companies in Bahrain to be able to launch new products and services using crypto assets, and allows startups to be able to actually leverage crypto assets into their product offering. So these are some of the examples of the crypto assets. So you have payment tokens, which are exchange tokens. These are like cryptocurrency exchanges that we have today, like Rain.bh. Most recently, CoinMina also launched, which allows you to buy and sell and trade cryptocurrency. You have utility tokens, which are basically, they are non-transferable tokens. They're also known as NFT, non-fungible tokens, which you cannot trade on or exchange it for any other value. And then you have what is called the asset tokens. The asset tokens is what specifically we're really talking about in this presentation, which talks about how, in terms of their function, they are very similar to equities, bonds, and derivatives. Tokens which are enable the physical assets to be traded on blockchain also fall on this category. And this is what means that you can actually link a physical real estate project into a token asset or crypto asset and launch it for the public and gain from reducing your infrastructure costs, reducing your building costs, reducing for you to be able to leverage the public to be able to buy into it. And then the public would be able to get issued the certificates that they actually own a real estate package or a real estate ownership into that specific project and receive the profits of the project, right? And the same thing as we mentioned earlier in the UAE, they also launched that in 2020, which means also in the UAE they can launch crypto assets, and they've already done that. There's a couple of startups who are already doing that for different real estate projects. For example, imagine being able to own a 10% stake in an apartment in Burj Khalifa, right? And you'll be able to receive the profits, the rental revenue generated from the apartment on a yearly basis, or maybe every month, into your wallet address directly into your account, right? At very low cost. This opens up the door to a huge opportunity for people to be able to leverage crypto assets for infrastructure costs, especially right now. Why is that? Because the pandemic has had a huge impact on hotels across the world. So a lot of the hotel worldwide, globally, even the top tourist destinations like Spain, like Spain, Germany, and Italy are suffering because of the pandemic, because of their lower travels. So now there's an opportunity for them to be able to actually issue those token share crypto assets for specific hotels in those properties, so they can gain the advantage where people will be able to actually subscribe to those using crypto assets, right? So let's say, okay, there's a couple of questions here. The same has been doable, the same in collective investment schemes in the past. What is the upside from having the shares in distributed ledger technology and notary? Okay, great question. So the question here is, the same has been happening in the past, and that's right. That was happening in the past, but not using cryptocurrency exchanges. The difference is in cost. The reason is, traditionally, if you had to go buy a property in any of, let's say in UK and England or London, you had to go through the real estate agents, and each of them take a percentage fee of the transaction, right? A huge percentage in some cases. If you go to Tokyo and Moscow, those big cities, the agents, they take much higher commission rates, which adds an additional cost to you as a buyer. But in this case, when you deploy it, you'll be able to reach a global scale, and they'll be able to buy directly from your token share using the Ethereum network, without having to go through agents, real estate agents, or local banks in those countries. And that's the big advantage. You reduce your cost. A person in China who can come and buy a token share ownership in Bahrain hotel directly into your app using the Ethereum network. And it's going to be point to point. skipping all the costs that if he does it traditionally, he has to go through local banks or local real estate agents, right? And that's where the advantage is. And the second advantage is it becomes a marketplace, because if you buy, let's say you buy a token in a hotel in Four Seasons, you can put it on the marketplace for sale directly, let's say 6 months later. If you buy it for $1,000 today, you can put it on the market for $2,000 by, let's say, by 6 months from now, and to be able to get a profit out of it, right? Because the value appreciates in value every year, so you'll be able to gain appreciated assets and value and be able to sell that at a higher profit if you desire to, or you can just maintain it and just keep receiving it, right? At the same time, for these big hotels, they were always targeting high net worth individuals in the past. So it was very difficult for the average investor to be able to gain a foothold into the specific crypto assets. Now, in Bahrain, what's happening right now, we have all the parts in place. You have the regulation from the central bank, the technology platform is there. You have the crypto exchange, which is trained for you to be able to issue a token share ownership in, which allows you to be able to reach a GCC or global market. What's missing currently right now is the real estate regulation that for title deeds, if a new building or let's say a land is being issued by the government, the title deed still does not have regulation where they can issue you, for example, Ahmed owns 10% of this land based on his token share ownership. That title deed does not exist yet as in terms of regulation. That's still pending. In the UAE, they already passed this now. This is all the Dubai Land Department. They issued the regulation, and startups are now issuing, for example, you can now buy an apartment in Dubai, 10% of it, and it's rented out, and you get the title deed issued to you that you own a 10% of an apartment in Dubai, right? That's available right now in the UAE. So now Bahrain needs to have this one part regulation, and then we'll be good to go. You'll be able to issue those token share ownership for real estate assets. Okay, let's shift into decentralized finance. Decentralized finance, you've got a lot of opportunities of what's happening in this space today. But what this means, also known as dApps, decentralized applications. DeFi leverages decentralized networks to transform old financial products into trustless and transparent protocols that run without intermediaries and without centralized control. Blockchain is the main technology that powers decentralized finance. Blockchain addresses secure transparency and trust. So the main relationship between crypto assets and DeFi is normally done by banks and financial institutions and insurance companies. With blockchain and crypto assets, they can be applied into multiple industries, into real estate and other sectors as well. And what's happening right now in the DeFi space, when you look at this graph here, in the beginning of this year, there was about $20 billion in DeFi assets. By now, by April, it's reached about $50 billion worth of assets, all locked into DeFi applications or DeFi startups. And this is happening across the globe. DeFi can be happening in lending, in different industries within the finance. So here's an example of all different DeFi startups which are happening today. And this is taken from CoinMarketCap. And we look at, these are different swaps. Each are different applications in decentralized finance. These are what is called decentralized exchanges. And you have derivatives, you have lending, and you have spot trading. All are different DeFi apps happening in the space today. The majority of these are all in the US, UK, and Europe. All these startups. And these are all, if you look at transaction volume here, in the last 24 hours, almost $1 billion happened in transaction data only for this Pocket Swap, Pancake Swap, which is a DeFi startup that started up 2 years ago, right? Almost 1 billion, and the others are coming in, like 414 million of transaction volume data. And the majority of these customers are all UK and US and Europe based. So when you look at what's happening in the world, all the different DeFi projects are coming up. If you look at the trends, fintech started 2010. By the time it reached the GCC, it was 2015. Cloud started off in 2009 in the US, UK, and Europe. When it reached the GCC market, Bahrain and UAE, it was about 2017. Decentralized finance started in 2016. We're estimating by the time it reaches the GCC region, probably by next year, when it starts gaining, some mainstream attention or global attention. But why not start now? Why not start now looking at the opportunities that DeFi presents and how you can leverage it? Because currently the banks in Bahrain, the GCC, are still doing digital transformation. They're not looking at DeFi, not looking at blockchain yet. It's still way down the line from them. But the opportunity is for startups when they actually can leverage DeFi applications into their products and services, right? So let's look at the opportunities and challenges for crypto assets, right? How does it provide? Existing companies can launch innovative products and services. New startups can actually launch new DeFi products within their existing products and services. It provides a funding option. Crypto assets provide a much higher funding option for government projects, and it attracts foreign direct investment into Bahrain as well when you start leveraging decentralized finance or crypto assets into your product, services, and offerings. Let me take a look at some of the questions here. We've got a few. Somebody asked about if the presentation will be shared. Yes, I'm happy to share the presentation with BIBF. They'll be able to distribute it to the attendees. One question was asked, Ziad, is there a way to circumvent the title deed issue right now? There is a way to do it around it, as long as your issuing of the crypto asset does not require a title deed certification. So, for example, if your crypto asset project is only for issuing profits for the token ownership holder, you don't need to have a title deed in this case, right? You can issue the token share ownership and issue the profits generated from your project as, for example, as a profit sharing for the token shareholder. So that's why you can avoid it, right? Another question is, how are tokens helpful for startups? They are, of course, how do you make sure that you will not lose your money? Okay, I'll answer this question about security. I'll answer this question in the next coming slides in the presentation.
If we keep the questions towards the end, I'll ask you all the questions later on. So if you just go through all the presentation, then we can take all the questions on board.
Okay, perfect. All right, we'll do that. Okay, so if we move on to challenges, how to address them. So the Survey and Land Department is the department in Bahrain by the government, that's owned by the government, that issues title deed registrations for physical assets in the country. So that's when we talked about the regulation required from the Survey Land Department to issue title deed based on token share ownership. Now, this happened already, currently right now in a building, in an apartment building, when you buy an apartment in Bahrain, you issue the title deed for that apartment. The next step is, if a developer wants to issue an apartment as token share ownership, and he says, I want to sell this apartment to 4 different owners, each one owns 25% stake in that apartment. So this is where the land registration should be able to say, okay, now we can issue title deed of 25% for this owner based on his ownership stake of 25%. That's the next, what we can expect for the regulation to happen. The next is education. We need to educate the people, the public, about this process and how this can add value to them for government infrastructure. So Bahrain government, they want to be able to build the metro, right? That metro is a huge cost, over $3 billion. So how can they leverage token share ownership into the metro stations, right? It's a very powerful way to gain advantage into reducing the cost of ownership, of building costs of a new metro station. Security, this is the question about security, or how can you ensure, how secure is your tokenization system? So the good news is the Ethereum is very secure as a public network. Nobody has control over Ethereum as a public network. When you issue your token share ownership, you enter your wallet address and you go and receive your token share ownership. So what happens? Automatically, the sale of the profits generated, you'll be receiving the profits into your wallet address on Ethereum. Nobody has control over Ethereum to turn it off or on. It's a public network. I'll talk more about this in the next coming slides. So the pros and cons of crypto: you have global potential at low cost. You have no intermediaries, no central control in between. So you minimize your cost of agents in between. It's a very high secure network, depending on which blockchain network to use. Now, 96% of token share ownership projects are on Ethereum right now because of the security and because Ethereum was built directly for that purpose. Now, the cons, the disadvantages. If you lose your wallet address, your private key or your wallet address number, you will not be able to access your wallet address. So if you subscribe to a hotel token share ownership and you lost your wallet number, you can't access it, you'll not be able to gain the Ether tokens and be able to transfer them into money, right? It will be gone forever. Private key is owned by the user. The private key to access your wallet address, such as just like Bitcoin right now. If you buy Bitcoin, if you lose your private key, you will lose access to your wallet address. You won't be able to get the actual tokens assigned to you, right? Vulnerable to 51% hashing attack. Those are some of the disadvantages about a blockchain network, which are a bit very technical, but I won't get into that right now. But these are some of the disadvantages of crypto assets, but which all can be addressed separately based on the token share ownership assigned in the Ethereum network. So here's an example of real estate asset currently happening in the US. If you go to this website right now, realty.co, you can actually buy into a property in Michigan for $50 for a house in Michigan that's being rented out, right? For $50, you can buy a percentage share in a house in Michigan, and it's when rented out every month, the rental value will be assigned directly into your wallet address, right? If you want to sell your token share, you can put it up in the market and sell it for, let's say, $2,000, whatever you choose the price to be into the marketplace, and someone sees it valuable, they will buy it from you. They will buy your share, right? And this is all a real project that got sold out. If you go to the website, and they support buyers from Bahrain, I checked with them, and I told my wife about it. So it's a very interesting project for real estate. And the same thing is happening across different real estate assets in the US, again, and even in the UK, right? All are now leveraging token share ownership for these projects. So Bahrain wants to launch, this is another example. Bahrain wants to launch a $2 billion metro project next month, right? So it's a huge cost for the government. And now they're looking at, okay, how can token share ownership help alleviate some of this cost? So here's an example. The metro station cost is $2 billion. Let me just shift this here. And one metro station, now, of course, the metro station that they announced going to be 20 different stations across 2 different lines. So I just put some assumptions here. One metro station can cost $10 million, for example, which is 3.8 million BD. Expected revenue per year for that specific metro station could be $1 million, right? Of course, you factor in ticket sales, you factor it in the advertising, LCD screens and everything else, branding value, and rentals. Every metro station has rental like shops and stores and restaurants. They all pay a rental fee for that specific metro station. So when you combine all that, it's a huge revenue potential for that specific metro station. So an example, if the government would issue a token share, 1 metro coin would equal to $1,000. So you'd be able to purchase $1,000 for a metro coin, and you'd end up owning the 1% or 0.5% stake in that station. So revenue per year issued, let's say $1 million. If you assume 40% of the revenue as profit, so the profits per year would be about $400,000 or 152,000 dinars per year. Your token share at 0.5% would give you $2,000 per year, right? Your token share ownership would give you $2,000 per share as an ownership of 0.5% into the metro station that's built. And your profit distribution to you as a token holder on a yearly basis, you'd receive $2,000 or 760 BD per year into your wallet address directly as a profit share. Now, obviously, these are profits, not revenue. So minus all the operating costs, minus all the infrastructure costs, the profits get generated. And then from the profits, your percent share ownership gets generated into your wallet address for you, right? So this concludes the presentation. We covered crypto assets, we covered opportunities and challenges of crypto assets. We covered regulation behind crypto assets in Bahrain and UAE. We talked about what is decentralized finance and the relationship between decentralized finance and crypto assets. And we talked about some examples of crypto assets within the Bahrain and the region and what's happening today. So now we can take up some questions.
Thank you so much, Fawaz. Quite an interesting session. We'll go ahead with the questions. First question, let's see. How can you invest in a DeFi token? What's the starting process? Which apps to use?
So basically what happened, you need to have the MetaMask, which is the wallet application that connects to the Ethereum network. So to make it simpler, let's say a DeFi project is released, they will normally tell you how to subscribe and purchase the tokens on their website. So normally they would say our token is equal to, for example, one ether unit. So an ether unit today is worth about $2,000 today as of today's market price. So one option for you to do is you can go to rain.bh, open an account there, and purchase ether from your bank account for $2,000, so about 800 BD. And now you'll have ether in your Rain account. From your Rain account, you transfer to ether to the DeFi project's wallet address, and they will assign you the token share accordingly. So the whole process happens in real time. Once you purchase the ether from Rain, you transfer the ether to the token share wallet address, and they give you the token share assigned. So when I buy 2 ethers from the token share, they assign me the token share ownership. They tell you, this is your wallet address, this is your assignment of your token share ownership, and that's what you own as a token holder.
Okay, great. There are many cryptocurrencies in the market around the world. How to validate them? What factors to be considered?
What do you mean, how to validate them?
It's a question from Nasser Sharif. It says, there are many cryptocurrencies. How to validate those cryptocurrencies that are available across the world?
Okay, so the validation of cryptocurrencies happens from the supply and demand of the market. Nobody has control to change, modify the cryptocurrencies. Now, what's happening is the top 5, maybe the top 4 cryptocurrencies are Bitcoin, Ether, and Litecoin, and others. The other altcoins, the majority of token assets are issued over Ether on Ethereum. They don't use any other cryptocurrencies. Now, what you can do, you can trade. If you have Bitcoin, for example, you can swap it, you can exchange it to Ether. If you have, for example, 0.5 Bitcoin, and you say, okay, I want to be able to subscribe to a token share asset issued by Four Seasons Hotel. So you would swap it, your Bitcoin, to Ether. From Ether, you'd exchange and buy the token share into Four Seasons, and they will assign you the token share ownership. But validation of crypto assets happen within the network, within the cryptocurrency itself.
Got it. Why Bitcoin is the only one hitting high prices on the expense of other crypto ones?
Okay, so this is about cryptocurrency trading. So there's a lot of speculation why Bitcoin is the highest, right? And a lot of it's, I think, media from the media. So 3 weeks ago, when Elon Musk said, I'm going to let people buy Tesla cars using Bitcoin, the media just went to stop buying Bitcoin like because they assumed the Bitcoin price is going to go up. When Elon Musk said, okay, Tesla's going to invest 1.5 billion in Bitcoin. So again, the majority of the public went and started buying. And then a lot of the top banks, JP Morgan, Goldman Sachs, international banks, all are announcing cryptocurrency, Bitcoin-based products that they will start releasing for their customers. So now the price of Bitcoin, people demand for Bitcoin start going up. And there are many different reasons around this, even other reasons, such as speculation about the US dollar. When you look at, for example, 10,000 BD today does not have the same purchasing power that it did 10 years ago. We all know that, right? What you can purchase with 10,000 BD today is much less than what it was 10 years ago. And because the BD is pegged to the US dollar depreciates in value. So the purchasing power of BD is going to decrease and decrease year after year, as was the US dollar. So many people know this, especially the international finance institutions. So they go and buy into Bitcoin because they know that the Bitcoin does not have the depreciating value as it did as the US dollar and other currencies have. And that's one of the advantages of buying or getting into cryptocurrency assets and Bitcoin.
Very well explained. Another one says, what criteria should we use to choose a crypto wallet?
What criteria should you use to choose a crypto wallet? Okay, so crypto wallets, there are 2 types. They are the type that they give you the private keys, which you own the private key. And there's the type where they don't give the private key, which means the private key is hosted by the exchange. If you own the private key, you are much less risk than if you don't own the private key. So example, Rain controls the private keys of all the users. So the risk there is that if Rain gets hacked, they can empty out all the cryptocurrencies from all users' accounts. That way you lose your wallet, your cryptocurrency. So if Ahmed owns 5 Bitcoin today on Rain gets hacked from hackers, they will empty out Ahmed's Bitcoins, and there's no way for you to recover that because Rain owns a private key. So the risk on the exchange, because they own the private key. On the other hand, if you own the private key to your wallet address, only you have the access to it. If people try to hack it, they have to steal the private key from you directly. They have to steal the private key from your personal account. So it's less risk for you to be able to have your own private key when you access your wallet address. And this applies to all cryptocurrencies, Bitcoin, Ether, Litecoin, or any other cryptocurrencies.
Which apps can we use different than Rain? I believe which exchange that we have other than Rain, basically, in this situation?
In the world, you have Binance, which are some of the top ones. You have Bitfinex, you have Bitstamp, they have Coinbase. These are the top cryptocurrencies in the world today. Many people go for Rain because Rain is regulated by the central bank. Those others are not. And so the risk of hacks and attacks and all that, we simply don't know. But of course, Binance and others, many people are doing it because, I mean, they've been in the market for the past 8-9 years. They always announce about the security built into their platforms. So they always want to make sure they ensure trust for all their users. And even those exchanges are now filing for regulation approval and licensing in those countries. Binance, I think, is based in Singapore. They're trying to get approval licenses from the Singapore licensing authorities and the central banks to be able to have that trust for the public that they are regulated and licensed by a central bank. And that's what the difference is.
Does Rain give you insurance against a hack? So it's basically, if hacked, is there an insurance against that?
As far as I know, they don't. But I know that there's a cyber security insurance policy that is offered by the big insurance companies specifically for that purpose. Because even in the past, 3-4 years ago, international exchanges did get hacked, and when they got hacked, the hackers stole wallet addresses. So now there's pressure on exchanges to be able to have cybersecurity insurance policies to be able to. But even if they do, they're not going to. I don't think they will be able to insure all your assets. They will probably say, okay, we will insure your cryptocurrency up to a maximum of $100,000 or $200,000, right? They will not. I don't think they'll be able to issue policy for 1 million. That's what majority of exchanges now, when they look at cybersecurity insurance, they're giving users that they can insure their assets, their cryptocurrency assets, up to a maximum of a cap, 100,000, 200,000 as a maximum capacity.
Got it. And there's an older question actually. When you were talking about the regulation side, Bitcoin will fall under which category? That's under the central bank's categories, I don't think.
Bitcoin, it would be. It's not in the central bank's category of currencies. It's actually it falls into the first one, the token of exchange, because Bitcoin can be exchanged by to USD, to Euro, to BD. So it falls in the first category, right? That's the exchange, the cryptocurrency exchange category. I think it was mentioned in the slide, in the central bank slide.
And what is non-fungible token?
Non-fungible token is a token of exchange that cannot be transferable to any other token or any other cryptocurrency. This is similar to what you have seen probably in the news in the past couple of weeks, where a painting was sold for 62 million by the authentic owner of the painting, the person who actually drew the painting. So he issues non-fungible token, which means people who buy into that painting creates a record, a transaction record, the token issued by the actual owner or the creator of the painting. That means it will not be transferable, it will not be changed to any crypto, it cannot be bought and sold, right? So this confirms that you as the owner, you are a legitimate owner of 10% stake into that painting issued by that specific owner. That's why they call it non-fungible, that you can't transfer it to any other currency.
Sure. Question that we have, considering the decentralized nature of the crypto market and the potential applications of blockchain, is it reasonable to say that the dynamics of the stock market doesn't apply here at all?
Yes, so they are very different because in the stock market, you're buying equity stakes based on existing companies. In the cryptocurrency, a lot of these startups, the initial coin offerings and the DeFi, they don't have existing products. They're just a brand new startup. So they are launching their products there in hoping that they will get to get demand for the market. But this can be applied not only for startups. You can apply it for existing companies. A bank today can go and issue and create a DeFi product issued by this bank, a retail bank, and issue it onto Ethereum because they have existing products. But this product will be completely a cryptocurrency asset based, a token share ownership based, right? They can do that to be able to leverage the demand for cryptocurrency assets. So you don't have to go, they're very similar because a cryptocurrency asset marketplace, you can buy and sell tokens, but in a stock market, you're buying and selling equity stake based on the stock ownership. That's where the difference is.
I think as a the same answer you have. Can anyone issue cryptocurrency, and how does it get its creditworthiness?
Cryptocurrencies are based on supply and demand. Yes, you can actually build your own cryptocurrency. You can actually go to the Bitcoin blockchain. It's available. You can actually create a fork out of the Bitcoin blockchain and create your own currency based on the Bitcoin blockchain's rules and code. You can do that if you have the programming skills. You can do that. And how long is it going to take? Depending. But when you issue that token, how is it going to determine value based on supply and demand? Is there anybody else who's going to buy that token from you based on the demand? What offering are you offering for that token for people to create the demand to buy into that token, right? It depends on supply and demand. That's what Bitcoin initially was created, because in the beginning of Bitcoin, it was completely free, 2009. And then somebody came and says, I'm going to buy one Bitcoin from you for $1. And then the first exchange for Bitcoin was created called Mt. Gox, which said, okay, I'm going to launch an exchange where any person is going to buy Bitcoin, and you can buy it at this specific price, at the market price of demand, supply and demand. And just supply and demand start going up and down. And that's where the market value is determined based on the supply and demand of that currency. Now, keep in mind, Bitcoin is going to have a fixed output of 21 million coins. That's programmed by the system into the blockchain network of Bitcoin. And that's one of the other reasons why demand is going so high, because they know it's going to have a fixed 21 million supply. There will not be an additional cap after that. So that's one of the reasons why people say, okay, there's going to be a limited supply, so people should buy it now and store it. By that time, it's going to increase in value. That's one of the other reasons why people are buying Bitcoin. Other cryptocurrencies do not have this specific feature programmed into them.
Got it. What if somebody wanted to mine coins? Is that against Bahrain regulations?
No, actually, I know a few people who are miners in Bahrain. There's no regulation against mining Bitcoin. You can go and mine it. If you have the equipment, you can get your PCs, your computers, and you can actually mine Bitcoin, and you can gain the rewards out of it. So there's no, I haven't heard anything illegal about it in Bahrain.
Perfect. Thank you so much, Fawaz. I think we've reached towards the end. I'll just share my screen for, actually I won't share the screen. I'll just talk about a program that we actually have for just before we conclude the session. There's a program that we actually put together with Mr. Fawaz that he will be delivering by September of this year, which is the Crypto Assets for Beginners, where we're going to cover a number of elements, tools and strategies on how to invest in crypto, how blockchain technology empowers individuals and businesses with tools they need to help level the playing field, mastering the basics of Bitcoin and blockchain technology, and blockchain security essentials. This course is going to be available at BIBF in September, inshallah, this year. Alongside this course, we have a number of series of programs that the BIBF offers, like FinTech and Flash, develop your FinTech strategy, digital banking and open banking, blockchain for FinTech, many of those programs. And I would actually encourage you to visit our website, bibf.com, and check all these details out. Once again, thank you so much, Fawaz, for being here today with us and sharing great knowledge on crypto assets. Thank you so much for all the attendees for being with us. Keep a watch on our Instagram for the next series or the next session that we have of TikToks. Thank you so much.
Thank you, guys. Thank you, Ahmed, for the opportunity. And I wish you guys all the best in cryptocurrencies. Thank you.
Thank you.